Good morning to you at dawn from the desert mountains of Palm Springs in California, which is where I am on the next leg of my travels. You can see the mountains there at dawn. They turn this fabulous reddy colour. Welcome to Money Markets and More. My name is Dominic Frisby, and today's piece is all about the conference that I attended in New Orleans. Now, I pronounce it Orleans because that's the way I think the English would pronounce Orleans in France, Orléans. We don't say Paris, we say Paris. So never mind this newfangled American New Orleans, we're going to call it New Orleans and preserve our great British cultural heritage in doing so. Back in the 1990s, when I was in my 20s, and all my university buddies and I, all we wanted to do was travel. We wanted to go everywhere and see the world. The problem was how to pay for it. And my solution was to work all year, save up, and then, having spent Christmas with my folks, get a flight somewhere on Boxing Day or the day after. Flights were always very cheap then. And then come back at the end of January. And the business I was in at the time, I was doing voiceovers and acting, but it never really got going. Voiceovers never really got going till mid-January. So I'd end up with almost 6 weeks of backpacking, and I'd only miss a couple of weeks worth of work, if that. So it worked quite well. But my best buddy, who's now Big Cheese at Channel 4, so I won't mention his name, he went several stages further and got a job compiling guidebooks for many years. And as a result, he has been to more places than anyone I've ever met. Across Asia, Africa, Europe, the Americas, you name it. And of all of them, he says New Orleans was the best place he ever went to. So you can imagine my delight when I got an invitation to come and speak at the New Orleans Investment Conference this year. Did I want to go? Yeah. So the conference took place last week, and I thought it might be of some use or interest to you if I shared some of my observations. Now I'm just coming up to a main road here, so I'm going to just quickly jog across. Don't want to get killed. Look, there's the mountain in the background. Doesn't it look fantastic? And then you can see dawn coming from that way. And those mountains over there, they're still in the shade. It's lovely and cool now, but it's going to get probably into the high 90s before the end of the day. So first up, I had an absolutely, dog kicking off, I had an absolutely great time at the conference. It was organised by Brian Lundin of the Gold Newsletter and his supremely competent team. It lasted 4 days, and there were workshops, events, all sorts of events, and a host of brilliant speakers. Who was there? There was quite a few celebrated resource investors, Rick Rule, Brent Cook, Sean Broderick, to, I suppose you'd call them macro strategists, Danielle DiMartino Booth, she was excellent, Peter Bookvar was good, James Grant, Jimmy Oreo, I really liked him. And then there was the unorthodox, let's say, Jim Rickards, George Gammon, I liked him, Dave Collum, Professor, very interesting, Robert Prechter, Elliott Waves. There was about 600 people came, and there were 100 exhibitors. And I would say the bulk of the attendees were American, over 50 and male. There were a lot of gold bugs in the room, and I felt well at home. And there was plenty of fun to be had in this most musical of cities by night. And food, fantastic food. But I would say the overriding theme of the conference, the subject that would not go away, was the Federal Reserve Bank. How long does it continue to raise rates for? When does it pivot? At what point do debt levels become unsustainable? The US has to pay interest on $31 trillion of debt, which surely caps how much it can further raise rates. It's going to be like $1 trillion a year before long, just interest. But then it's also made clear that fighting inflation is its number one priority. So therefore rates have to go up, and the subjects just went round and round. Some argue that it pivots, others that it keeps on raising. There was also plenty of talk about falling real estate prices, commodities, especially base and battery metals, not to mention energy. Coal came up a few times, the strong dollar, and the Ukraine war. And I found myself on a panel with George Gammon and Jim Rickards about the threat of imminent nuclear war that got very tinfoil hat. And when I suggested that, to everyone's surprise, Russia was losing the war in Ukraine, Rickards declared that I had fallen for the propaganda and had become a mouthpiece for the globalist agenda and the new world order. Each to their own, I guess. Another theme that cropped up, I mean, the overriding thing was this Federal Reserve Bank, but another thing that cropped up a couple of times was investing in the UK and the opportunities there. Big bang, there's some guys doing a bit of work there. The yields are incredible on real estate investment trusts, said Peter Bookvar was saying that. He's a bit of an Anglophile. And unlike, say, New York, where a lot of commercial property is sitting vacant, while many still continue to work for UK, in the UK it's mostly being used again. This was his argument. And perhaps most importantly, UK property is looking very cheap to our transatlantic friends thanks to the strong dollar. And I warned about the potential for rising rates here in the UK. We're behind the US in the rate cycle and the damage that could potentially do to real estate, whether commercial or residential. But Bookvar still felt that the UK is looking like a very attractive proposition at the moment. We have a tendency to denigrate ourselves in the UK, and so it's very good to go abroad and meet people who see the UK in a much more favourable light. A lot of North American money is going to make its way to Europe and the UK, not to mention Japan, in the not too distant future, I would venture, just because of valuations. I focus my talk on subjects that I've been covering quite extensively here on YouTube and over on Substack in recent weeks: energy, gold and its relevance, or lack thereof, in today's world, and China's monumental gold holdings, and the strong dollar superseding all. There were plenty of mining companies there too, exhibiting their wares. I think my favourite was probably a silver mining company by the name of Sierra Madre Gold and Silver. It's called Gold and Silver, but it's really a silver company. Ticker symbol SM on the TSX Venture Exchange. It has got good young management, young by the standards of mining, good broker backing, some promising exploration properties, and it's just acquired a silver mine from First Majestic, which is a big silver producer, that it's going to put back into production, and it's quite compelling economics, $10-12 an ounce cost of production. And pending the closing of the transaction, the stock is currently halted, which is what all silver companies should be, as it removes the temptation to buy them. There's nothing better than a silver company that you can't buy. Your investments are much safer that way. Thank you very much for watching. There's that lovely mountain in the background again. Please subscribe to the channel and to my Substack. And if you happen to be in London on November the 24th, wearing my comedy hat, I'll be doing a gig with the Gilets Jaunes, my band, at Crazy Coq's, which is underneath Brasserie Zedel on Piccadilly Circus. It is one of the best venues in the West End for musical comedy. It's going to be a fantastic night, so if you're around, please come on down. I'll put a link in the comments, and I'll see you very soon. Goodbye.